This is a very interesting story. When we started to work on the story, we were expecting bankers to tell us that the credit growth targets may not be met for this year, and in fact, they could revise their targets downwards. But as we spoke to bankers, most of the bankers, 9 out of 11 bankers, have told us that in fact the targets they are still hopeful that they will beat the RBI's 19% target, mostly because they are expecting, even though corporate demand is not so good, large companies haven't borrowed as much and are not expected to probably, they're expecting demand for loans from smaller companies, individuals like you and me, and agriculture sector, which is where the small ticket size loans come from. Going forward, though there is some stress in credit demand, bankers still think that they can make up in the next 3 quarters of the year. Even the smaller banks are still maintaining that they can maybe match their credit growth numbers of last year of 30% or 75% in the case of Dhanlakshmi Bank. But the large banks, among the large banks, some guys like State Bank of India have already cut targets from 19% to about 16% on the lower end of their band. And it remains to be seen if the larger guys who are still continuing with the target like Punjab National or Bank of Baroda will meet their targets in the next 3 quarters to come.